Hello everyone and welcome to another midweek technical look, and today we're going to have a look at the extremely movements that we had in the market, and especially from euro and dollars. We have the ECB interest rate decision, which is expected to cut rates by 25 basis points in the sixth consecutive rate reduction. So having a look at euro and dollar, we can see that the market recorded a new formal high above the 1.08 round number, and it added more than 4% over the last 3 days. So the market is battling with the 61.8% Fibonacci retracement level of the downlink from the 1.1215 to 1.0176 at 1.0817. The market is holding above the 200-day SMA, which is a sign for more bullish movements, and if there is another closing session above the 61.8% Fibo, it will endorse this scenario. So the next resistance levels are coming from the 1.0940 ahead of the 1.10 round number. On the other hand, the drop beneath the 200-day SMA, it may drive the market towards the 1.0680 and the 1.0630 support levels ahead of the restrictive region of 1.05 to 1.0530 that it failed several times in the past months to break above it. Looking now at the technical oscillators, the RSI is moving horizontally above the 70 level, suggesting that this extreme upside movement may come to an end and we may see a bearish correction anytime soon. However, the MACD is still extending its bullish momentum above its trigger and the zero lines. Now turning to GBPUSD, we had also a new 4-month high here at 1.2917, moving around the upper Bollinger Band. So if the price continues this upside movement, then the market, it may test the 1.3045 and the 1.31 psychological mark. Also, the price here is holding above the 200-day SMA and also well above this ascending channel that it has been drawn since the mid of January. Now, if there is a move beneath the 1.2815 to 1.2840 and the 200-day SMA, which lies around the 1.2785 level, then the market, it may return back within this ascending channel and the 1.2730 support. Even lower, the mid-level of the Bollinger Band at 1.2615, it may halt bearish movements, but if there is another movement to the downside, the 1.2550 and this ascending trend line in the short term, it may halt the bearish correction. The RSI is crossing above the 70 level but is holding a weak momentum, while the stochastic is turning slightly lower in the overbought region, both indicating that this bullish movement may come to an end and we may see some negative movements anytime soon. Also, having a look at oil prices, we had an extreme bearish movement in the previous sessions, moving towards the almost 2-year low of 65.36, and it penetrated the unbreakable 67 round number, and as we can see from the weekly chart, this level it was holding since August of 2021. So if the price continues to the downside, then the oil prices, it will turn to negative. Now the price is currently holding near this key level of 67, and if there is a move above it, then it may return to the 68.70 area and even higher near the 20-day SMA, which overlaps with the short-term downtrend line and this long-term downtrend line also at 70.30. Even higher, the 71.50 and the 50-day SMA at 17.3, it may pose the upside movements, but there is also another tough obstacle of the 200-day SMA at 73.95. Now to the downside, if there is a closing session beneath the 65.70, then it will open the way towards the 63.60 support taken from the April of 2023 low. The MACD oscillator is extending its negative movement below its trigger and zero lines. On the other hand, RSI is bouncing off the 30 area and is moving slightly higher, suggesting that we may see some bullish correction before the market continues to the downside. So that's all from me. Thank you for watching and have a great day.